Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. While Indian equities may follow global cues out there and end the week on a rocky note out there, SGX Nifty indicates somewhat a mildly negative start coming in for the broader index. Wall Street closed lower for fourth consecutive session yesterday. Renewed fears of contagion risk from the banking sector drove the sell-off. While Asian markets have got into Friday's session on the defensive footing out there, bringing resilient week for local stock to a rocky end out there. In terms of FII, they've bought shares worth around 1,414 odd crore, and DIIs too have been purchased. They have been buyers out there and have purchased shares worth around 441 odd crore on May 4th. Britannia, Marico, Adani Power, Bahety Forge, Alembic Pharma and Paytm. These are going to be some of the companies which will be reporting in their numbers today. But also what will be in focus will be HDFC twins out there due to the MSCI adjustments that have taken place post the shareholding disclosure and the announcement that has come through, which is a bit of negative for both of them, specifically for HDFC Bank. But before that, let us get going and discuss some stocks and strategies out there. With Hemen Kapadia of Choksey is out there. Good morning there, Hemen.
A very good morning to you, Nickey. Thank you for having me on the show.
Pleasure is all ours. I'm going to start off by asking you about your strategy on Nifty and Bank Nifty. Nifty has been holding on after it just took a breather out there in surprisingly good week and again resumed that bull run. How do you think today's session will stack out, and what's going to be the strategy that the investors or the participants should keep in mind while playing up the markets today?
Nickey, if you check, last 2 days, the day before we had the banks falling all over the place, Dow Jones was down. We disregarded that yesterday. Now, I'm not sure whether we repeat the same thing today. So, frankly speaking, we look comfortably poised. But every day, if Dow Jones is going to be down 250, 300 points, somewhere it is going to impact us, at least sentimentally. On the flip side, we've seen FI figures, buy figures coming in almost every day, which is a big relief. The VIX remains below 12, Nickey. I think there's an extended period of time where the VIX has remained extremely low, which is a bit disconcerting in the sense there could be a bump up anytime, but as of now, a low VIX obviously means well for the markets. 18,250 is important as far as the Nifty is concerned, Nickey. We just about closed above that. So, like you mentioned, slightly weak SGX Nifty is fine. I don't think anything changes. The setup is positive as far as the structure is concerned. Yes, things are looking a bit stretched. Things are looking a bit overbought. So, I would say rather than go by the Nifty or the Bank Nifty, Nickey, it would be prudent to be skill specific because the mid caps and small caps have done well after a long time. So action is happening all over the place. So I'd take a step back for the Nifty. Yes, if it opens gap down or opens weak or opens and goes down, then I would look to buy. There aren't any reversals yet. There aren't any negative divergence, and neither have any levels broken Nifty, as far as Nifty or Bank Nifty is concerned, Nickey. So despite the mad run up, mad in the sense because if it goes up one way, yeah, you do get a bit concerned. But despite the scintillating run-up, I'd say the structure still remains up, Nickey.
Sure. I completely agree with you when you say that it's been completely, Indian equity markets have not been following global, suit thus far, and it's behaving completely in a different way and having the own bullish trajectory out there. It's a buy on dip strategy that clearly you've suggested at this point of time. But there is a big amount of participation coming in from the broader markets, right? The mid-cap index have been holding up well. And how about the Bank Nifty? That's where you think a bit of a blip out there. But how do you look at the entire strategy for Bank Nifty right now, and also your two profitable bets for our viewers right now?
Frankly speaking, Nickey, I think both have closed at the day's high, and like you mentioned, the SGX Nifty would seem to suggest a weak opening. Well, the Bank Nifty has been leading this entire move, and it's been a phenomenal run. So, once again, I would say it's a little bit of caution as far as the Bank Nifty is concerned. I would not recommend any shorts, but yeah. And coming to individual stock strategies, I have a few, Nicky. First one is a buy on Bajaj Finserv. The setup has turned positive. Higher tops, higher bottoms. It's closed above the 55-day exponential moving average. The weekly picture has improved. So one can buy Bajaj Finserv at 1370, stop loss 1350, target 1410. Secondly, if there is a buy call on Havells, the results came out yesterday. The stock looks good. There's a rounding bottom. There's a breakout after almost 1.5 months. So buy on Havells at 1250, stop loss 1225, target 1300. And lastly, excuse me, a buy call on Reliance Industries. Favorite stock has been doing decently well. I think it is going to go up further from here. The weekly setup is improved, so Reliance looks quite positive. One can buy Reliance at 2445, stop loss 2420, target 2495. It's a modest target. I think it will be comfortably overshot, Nickey.
All right, so Havells, Reliance and Bajaj Finserv are the three bets early in the morning coming in from Hemen. Havells has reported decent set of fourth quarter number, but the management commentary at this point of time is pretty guarded. Industrial segment has been doing good, but the consumer demand has been tepid overall. So do keep an eye out on this one. We're looking at mixed, at least when it comes to the commentary part. It remains to be a little bit on the cautious side out there. But let's address the top movers in the day, and there are a bunch of stocks, believe me when I say that. HDFC twins out there, these are the ones which are first going to be in focus, and they are heavyweights. So expect an impact coming in on the index on account of that. Hemen, I'm going to come back to you and ask you about your assessment on HDFC and HDFC twins. But I'm going to read into the development before and explain what has happened. Dabur India has reported numbers. Of course, Britannia will be reporting in the numbers. So expect the FMCG pack to be overall in action today. And Godrej Properties, that's going to be the one that you keep an eye out on. Godrej Property per se, if you look at the performance coming in for Godrej, it's reported number a day before yesterday in the evening. But Morgan Stanley has given up an upgrade rating coming in on this one to equal weight with a target price of 1,354 odd crore. Beg your pardon, 1,354 per share, which is not really significantly higher as compared to the current market price. It says that the company now is generating meaningful cash flows from operation, and this is sufficient to fund its new project acquisitions, any requirement thus far. And with this, the company has achieved, separately it's achieved a meaningful geographic diversification, and right now the business model is resilient. On account of that, there's an upgrade coming in on Godrej Property, but HDFC twins, which is expected to be in focus out there. A bit of negative coming in on account of HDFC Bank. MSCI intends to add HDFC Bank to the large cap segment of MSCI Global Standard Index. This would lead to no incremental inflow, but a slight outflow to an extent of around $150 to $200 million. A post-acquisition adjustment by MSCI, which is as per the disclosed shareholding pattern. Currently, HDFC weight is 6.74 in MSCI India Index. Now, the preliminary calculation of the merged entity would have a slightly lower weight of around 6.5%. So that's a bit of development there, because of which you might see the outflows coming in, and this weighing down on the performance of HDFC. Also keep an eye out on HDFC Bank per se. Both of them are heavyweights, so it will have some bearing of sorts on the index. I'm going to graduate to our discussions in terms of earnings out there. We've essentially addressed the top mover of the day, but let's talk about the earnings. Hero MotoCorp and Dabur, both of them reported numbers yesterday. Hero MotoCorp reported really good set of numbers. Revenue was up by 12%, and the number came at around 8,306 crore, which is higher as compared to the estimation of 8,237 odd crore. So there is a bit of jump coming in on the top line performance. EBITDA was up by 22%, came in at 1,081 crore, more or less in line with what the street was working with. Margins at 13% as compared to 11.2%. And if you talk about the profitability of the company, that came in at 858 crore, which is 37% higher year-on-year basis as compared to the estimates of around 747 odd crore. So clearly you're seeing the top performance, the outperformance coming in on the top line front, on the bottom line front, and the operational margins or the operational performance pretty much being in sync with what the estimate was, that there's a decent volume growth which has taken place, 6.9% year-on-year basis. You know, the volume growth in Q4 was driven by healthy recovery in the urban demand, which is a bit of positive, actually a big positive coming in for the FMCG basket, auto basket overall, because urban demand thus far has been a little tepid of sorts. Dabur India reported in numbers, net profit 300 crore, estimates of 350 crore, revenue at 2,678 crore. This is more or less what the estimates were. The volume growth came in at 1% as compared to the poll of -1 to +2%. So there was a varied amount of expectation on the volume performance. But we're going to be addressing in the markets for you. Dabur really lackluster set of numbers, or maybe just in line set of numbers coming in for Dabur. No surprises out there. But we're going to be addressing in the markets out there for you. It's going to be an important day today. Bulls have been holding up. It remains to be seen if we start off on a rocky or rather shaky, a very shaky start coming in for equity markets today. So that's going to be one thing that we're going to be keenly keeping an eye out on. Nifty 50, okay, we are looking at a negative start coming in for the markets at this point of time. 0.5% of losses coming in for the markets, and finally giving up to the selling pressure, but holding on above that 18,150 mark, which is a crucial support level at this point of time for the markets. It's, I think, for the first time in the week that entire Indian equity markets are just following global cues, you know. Otherwise, the performance has been surprisingly good for the entire week out there. But let's talk about Bank Nifty index overall and the mid cap and the small caps. Post we talk about the Bank Nifty out there. For Bank Nifty, we are looking at losses coming in for that one. Losses to an extent of 3/4% of loss coming in for that one. And so clearly we are seeing no amount of support being lent by Bank Nifty. In fact, the drag is coming in from overall from the Bank Nifty index right now. And even in terms of the mid cap index that we have, which was showing some amount of traction for the entire week, it's down and out. Actually, not really down and out. It's flat with negative bias for the Nifty mid cap index. Now remember, it's outperformed the large cap for the entire week out there. There is some amount of resilience that the small cap index is showing right now. We're talking about BSE small cap index right now. And in terms of the other sectoral indices that we have on our list, just to see the flavor of where the momentum is flowing right now. Metal index, well, that's down and out with losses of around 0.1% out there. If you talk about the other sectoral indices, IT is the one, 0.1% of loss coming in on that one as well. In terms of pharma, down and out with losses of close to 0.25% out there for the defensive pack. Let's also talk about the FMCG and the IT basket per se. FMCG is actually holding up for you. Dabur reported numbers. Britannia is going to be reporting in numbers. So that's clearly the one which is up in green with gains of around 0.1% out there. In terms of auto basket, Hero MotoCorp has clearly reported good set of numbers along with the peers out there. So that kind of performance is not really unjustified. Auto index holding up for you with gains of around 0.5% out there. And IT index too, at this point of time, is trading flat with some amount of negative bias building in for that one. In terms of the market breadth, 9 advances versus 38 declines, and 3 stocks which at this point of time are unchanged. So most of the market breadth is right now skewed in the favor of declines. But let's address the top gainers and the top losers out there for you. ICICI Bank, Adani Enterprises and L&T. These are some of the top gainers that we have on the list. Axis Bank, Kotak Mahindra Bank, ONGC. These are some of the other top gainers that we have on our list right now. SBI, Britannia, before its report, its number is shining in green, and Hero MotoCorp, which reported steady set of numbers, one of the top gainers that we have on the list right now. HDFC and HDFC Bank, just the way I pointed, right? This is the twin or the heavyweight, which is right now weighing down on the performance of Nifty because of the MSCI adjustment that has come through. So HDFC and HDFC Bank out there, IndusInd Bank out there as the top loser, Hindalco, DRL and Tata Steel. These are some of the other top losers that we have on our list right now. Bajaj Finserv, Bajaj Finance, Asian Paints. So it is HDFC Twins and Bajaj Twins right now, which are dragging the markets low. And you can see the stark difference in performance coming in within the financial space. You know, something like a Kotak Mahindra Bank is doing well, but something like, you're seeing that difference coming in on the banking sector in terms of the IndusInd Bank performance being one of the top losers of the stock right now. So you're seeing the divergent trend playing out entirely for the financial sector, just the way we saw for IT sector some time back. So that's clearly the one, we need to really keep an close eye out on. But Britannia is going to be, reporting in the numbers today. So far, Dabur, if you look at the Dabur charts out there, just to see how that one is moving after the earnings. Hero MotoCorp clearly reported in good set of numbers, but Dabur is the one that we need to keep a close eye out on after the numbers have been reported. The EBITDA came in at around 410 crore as compared to the estimate of around 425 odd crore. You are seeing that negative momentum building in for Dabur. Just the way we pointed, right? No surprises out there. Lackluster numbers coming in for Dabur. You aren't seeing anything on that level. But Britannia, on the other hand, that's the one which will be reporting in the numbers today. That stock has been holding up for you in green and probably one of the top gainers that we have on the list right now. So within FMCG basket too, you can see the different performance coming in from the entire basket per se. But that's clearly some of the top movers and the top losers that we have on our list right now. And like we indicated, HDFC Twins are the one in focus. Hemen, come in on this one. Your view on HDFC Twins, how the charts look like. We clearly pointed out these are going to be the stocks which are going to be building in with the negative momentum out there and probably dragging the index lower, a little bit more lower. Your assessment on these stocks right now?
It's absolutely. You hit the nail on the head, Nickey, just before the market started. We've seen a huge gap down. I mean, if HDFC Bank closes at 17.27 yesterday and opens at 16.26, that's 100 points lower, Nickey. I think that is significant. And like you said, that has also taken a toll on the market. But I have a feeling things should stabilize. I don't think the structure changes dramatically. Yes, we had a phenomenal run-up and all-time highs. One could expect some resistance. Okay, this was an event-driven thing. But the way I see it, we've already recovered from the day's low. So assuming we don't end at the day's low, Nickey, I'd say sanity should prevail. There should be stability, nothing much to worry. Everything, okay, we've lost a little bit of the luster because of the HDFC Twins, but things are okay. I believe by the end of the way, we should be on an even keel, more or less, Nickey.
All right, so that's the word coming in for the HDFC along with the strategy thus far that we have played on Nifty, Bank Nifty. Hemen, thank you so much for taking out the time and speaking to us. It was indeed a pleasure chatting with you.
Thank you for having me.
All right, so let's address the fundamental side of the story now. A lot of things to be spoken about. Talk about FMCG, talk about IT, talk about financials amidst all of this. And to join us to take the discussion forward is Manoj Bahety, the founder, Carnelian Asset Advisors out there. Good morning.
Morning.
All right, I'm going to start off with your assessment overall on the FMCG basket right now. Britannia will be coming in with the numbers. Dabur reported numbers out there. But the demand per se, though, seems to be picking up, but not exactly the way that we were hoping from the urban pockets out there. Volume growth seems to be decent for most of these companies. What are you reading into the entire FMCG pack right now at the valuation that they're demanding?
So, Nickey, I think definitely valuation of FMCG stocks are demanding. But if you look at the kind of growth, especially on the rural India, and also I think the commodity pricing pressure, the FMCG which are facing the commodity pricing pressure, and of late we have also seen FMCG are coming back in terms of their grammage correction, and they have also started passing on the commodity prices into the consumers. So I think demand is definitely on the urban side. the demand is little subdued. I think rural side demand is holding on good. The key thing to watch about is that probability of El Nino. If it is going to impact rural India, then it may impact FMCG demand. But till now, I think we are seeing very good demand momentum. One of the stocks which we are holding in FMCG stock in our portfolio. First, let me just give disclaimer, Nickey. Few of the stocks or sectors which I may be discussing on this show, our fund may be owning those names. So viewers are likely to take note of that. So one of the stocks which we own in our one of the strategies ITs, and the way we are seeing the demand momentum for that stock, both on the cigarette as well as on the FMCG sectors. And means along with the demand, there is a good story of margin uptick also, especially on the FMCG sector. So that's our take on FMCG. Other than that, we don't own many of the FMCG stocks.
Sure, Manoj, I got the perspective out there. So ITC is the name that you're holding in the bar, the entire packet pocket right now. And if you talk about the performance coming in, you're seeing a good set of demand coming in for the FMCG pack. But let's also talk about financials out there. Most of the banks reported good set of quarterly earnings this time around. You talk about something like an ICICI Bank, or for that matter, IndusInd Bank also to a matter, ICICI Bank along with HDFC Bank, all of them have reported steady set of numbers. The NPA have come down. The NIMs have seen some amount of asset quality improvement. The margins have improved. How are you looking into the space right now? And within the space, which kind of stocks do you like in the pecking order that you'd like to give?
Sure, Nickey. I think we are overweight on BFSI space, and few of the stocks I think we are holding for a long time now. ICICI Bank is one of our top holdings, and it has continued to do well. Post the management change which has happened almost 3.5, 4 years back. After that, I think ICICI Bank is completely on different trajectory. And as you rightly mentioned, that the kind of credit growth or the kind of loan book growth these banks are delivering, along with almost negligible credit costs. Like if you see ICICI Bank, this quarter, entire credit cost or entire provisioning was on account of some contingency provisions. So credit cost is behind, credit cost is there. Only one thing is there, that these banks now they have to get the deposit growth momentum along with the credit growth momentum. And another thing I would like to add to this, that the credit growth which is coming with most of the banks, even with the top tier NBFCs, I think it is also early signal of that private capex coming back to the economy. Other than ICICI Bank, our top holding is Aditya Birla Capital. Which also we have bought post the management change, and if you see the kind of credit growth, almost 20% kind of loan book growth Aditya Birla Capital has delivered, and next 2-3 years you will see a consistent ROE improvement, controlled credit cost, and which will lead to ultimately valuation re-rating. So these are a couple of our topmost holding, and we hold like few other banks also as a part of our BFSI bucket.
All right. So ICICI Bank clearly, sir, reported splendid set of numbers this quarter, and it was a beat on all the count. Talk about the margins, talk about the asset quality, overall the profitability. It was an all-round, beat out there for ICICI Bank. But something that holds the attention of a lot of viewers this time around is the new age companies and the performance that has come thus far. And Paytm for that matter, the company has seen that turnaround coming in on the EBITDA level. Not sure if you'd want to talk about it in detail, but Paytm will be reporting in the numbers today, and we are expecting some amount of traction building in on that name. What's your overall assessment on the new age companies, and if at all, your view coming in on Paytm?
Yeah, I think the new age company, definitely one thing is that those guys, they are definitely having a very, very large opportunity size. and few of those businesses may do well, may prosper also. But if one looks at the kind of disruption risk, the way the technology is evolving, along with the kind of valuation that these stocks are demanding. So, because of that, in our risk-reward framework, we are not into new age companies. I don't have much perspective on this because we are not tracking these names very, very closely.
All right, so Paytm is not the one that Manoj clearly tracks at this point of time, because new age companies' risk-reward ratio isn't that attractive at this point of time after the huge correction that they've witnessed thus far and a little bit of guidance that they've given thus far. But with this, Manoj, we're going to leave it at that, and thank you so much for taking out the time and speaking to us this morning.
Thank you. Thank you.
All right, we're just closing in. We're just running out of time out there, and we were expecting just a bit of market check out there. Nifty, let's see what Nifty is doing at this point of time before we put in a wrap to this edition of the segment out there. Nifty 50 at this point of time, 18,170 level. So it's holding above that 150 mark at this point of time, with losses of around 0.5%. Losses coming in on that one. So the 18,150 mark is clearly being held on to. Remains to be seen if it ends the otherwise surprisingly good week on a rocky note. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us link on the bottom of your screen, and for rest of the update, stay tuned into moneycontrol.com and Moneycontrol app.